Good day, traders. Before we get started, I'd really appreciate all the emails and questions that I've received, and I apologize if I haven't gotten back to everybody, but doing my best to do that. If you could take a second and hit the like button for me, it'd be greatly appreciated. If you haven't subscribed, subscribe. I try to update 2-3 times a week with relevant information that will help improve your trading in real time. So again, thank you very much. Let's get started. Good day, traders. Stacy Burke from Stacy Burke Trading. Back to our videos. We've been in lockdown here in Perth. School holidays, huge storms the last 5 days. So just been focusing on some family time and trading. Today we're going to be going over market maker templates, some of the basic templates and the 3-day setup, but also how news catalysts can play a role in that. Also the red day and green day scenarios. We've had a lot of questions about, the first red day, the first green day. We saw the first red day show up on the pound, and from that point that market has fallen for a week. But today we're just going to look at some setups that have occurred and how they occur, and using the 3-day cycle, the first red day, first green day. Not even going to get into looking at daily charts and the weekly green and red changes, but the same principles apply on any time frame. For me anyways, looking at scalable trade setups, and scalable trade setups to me are the ones that trap volume on the wrong side of the equation of where the market's going to move based on these 3-day, 3-session, 3-hour setups sometimes. So gold obviously offers some tremendous opportunities almost on a daily basis in every session. But over the course of the week, and we're going to look at that chart today, the potential of what may be building up on that, but also the Canadian dollar. We'll look at the euro and the pound, and looking at the Aussie dollar. So a few weeks ago we had the Fed. We saw the market drop down. We talked about the second-day trade setup that occurred on some of the other major pairs. But the concepts I want you to kind of grasp are Monday to Friday, the weekly template that gets set up over the 3-day cycle. It can happen on a Friday, Monday. It can happen on a Friday, Monday, Tuesday. It can be a Monday, Tuesday, Wednesday. We're going to look at an example of a payrolls template, which is typical for showing up on a payrolls week, which also coincides with the beginning of potentially a new monthly cycle for either a trend continuation or a reversal. So looking at the Aussie dollar, again, the pink line is our Mondays. We saw a 3-day setup heading into the Fed. I don't get in front of the news. I'm not talking about trading the news. I'm talking about understanding the big picture templates. We talked about the second-day trade, the follow-through on the second day, and grasping a simple concept no matter what time frame you're trading. We're not even going to look at numbers right now. When we get to today's chart on the Aussie, we'll look at that and specifically understand how the timings apply, the session timings, but the levels, the round numbers. Understand the time frame is completely irrelevant when you're at the right price. So if you're going to get in at a price, it doesn't matter if you're on a 4-hour system, a daily system, a 15-minute system, a 5-minute system, or a 1-minute system. Obviously, if you have a number level or a price level, or price has been confirmed for your entry, if you're getting in on a 15-minute, somebody's already in on the 1-minute, and there may be already a break even by the time the 15-minute trader is in. Now, a lot of people talk about they want to see confirmation, they want to see all their indicators and things line up at the same time. But by the time that happens, there's already been a move, especially in gold. But again, just grasping the simple concepts that we have a Monday, Tuesday, Wednesday, a Thursday, Friday to end our week. Now, we have these lower highs. We come into Monday, and the market gives us a higher high. This is critical. Whenever you are looking for a reversal, in a lot of cases, you will have a higher high or a lower low before that reversal occurs. Now, creeping trends will reverse with a higher high or a lower low. If it's a blow-off creeping trend, you will not get that scenario. So if you are in a trend trade, or if you're in a creeping trend and you're looking for a blow-off, and you've just shorted a higher high, chances are now you may be in a move that's potentially setting up for a reversal. Now, Monday, I talk about narrow range days. Friday, Monday, Tuesday typically will be the high or low of a week. The levels will form a high or a low for a week. Now, Monday in this particular week gave us our first green day. Now, in our last video, we talked about first red day. First green day, same principles apply. We want to know that when we have a day that closes above its open or below its open for a red day, that we have volume trapped. If we don't have volume trapped, that may just be a pullback in a trend. But when we have volume trapped down low, we may now potentially have a market that is in the possibility of a reversal. So Monday, Tuesday, we talk about, again, 80% of the time will form the high and low extremes for a week. Now, a lot of traders say they don't trade Mondays. Now, in some cases, Monday can be a tremendous opportunity for trading, depending on where we're at in that weekly template from the previous week, but also the monthly template in terms of week 1, week 2, week 3, week 4. We could be in a week 1 of a new month, and Monday may form a peak formation in Asia and give us a tremendous trending day because Friday formed the low of the month. So just some little things to be to consider in your decision making. Timing and price levels are everything. Timing meaning timing, the timing of your trade entry. So you can be right as we see somebody going long here in Asia, but they're in early. We again, we talk about the first mouse, second mouse gets the cheese. So the first break forms our potential indicator that the market is now possibly going to be heading up, but not before it comes down to hit stops. Now, I'm not going to get into timing 12 candle window or anything until till today, because we'll look at some scenarios. But again, this price level was 10.15. This level down at the bottom, right down here, this pin to the low, is the second candle of the London session. Now, you're going to see this again over and over again. So when people talk about hindsight trading and everything else, I'm going to suggest to them to learn to tell the time. If you learn how to tell the time and understand the rotation of timing when they have gone to the high or the low, the level and the rotation of time, equity hour takes traders in the wrong direction. Traders chase the momentum, wanting to sell this. They're selling at the low of the week. The market reverses, goes back through the high of the day, and they start their week for the new week. Day 1, day 2, day 3. Monday, Tuesday, Wednesday. So in this particular case, we see Monday, Tuesday, market pulls back on Tuesday into Monday's high before continuing that move into Wednesday. They take out Tuesday's high and they go into Wednesday. Now, we see a 1, 2, 3 scenario. The market consolidates into an inside day on the Thursday, which again, you'll notice no daily lows have been broken at anywhere in this point. So as we go up higher, if you're buying this trend, quote unquote trend, which your indicators, if you're using indicators, will be taking you all the way up and buying high, and I want to clarify that there's nothing wrong with trading with this trend. You'll notice the market pulls back and forms a low of the day first before continuing. The market puts in a high of the current day before working down lower, forming a low of the day and continuing. We get to our third day, the market consolidates sideways, puts in a low of the day, a higher high, stays as an inside bar, still a green day. Market continues to trend, which is typical of level 3 behavior. It will blow off in the direction of the trend. Makes a peak formation before pulling back and ending the week on a green day. 5 green days in a row. We get to the next week, and Monday is our first red day, a day that closes below the open. Now, again, the previous Monday was our first green day. We talk about trap. We want to see trap volume. So we get our first, on the first green day, the market closed up top. We have volume trapped all down underneath. All down underneath. This is before we get over to Tuesday. But they go down into traders that are long and work into that low before reversing. So if you sold down low on Monday, you're in that for the whole week, which probably again will blow your account out or put you in significant stress, and hopefully you're not averaging into losing trades all the way down. But we get our first red day on the following Monday. So it doesn't matter what instrument you're trading. I get this question all the time. Does this work on Bitcoin? Does this work on S&P and NASDAQ? I don't know. It works on any instrument. Timings are the same. Equity markets open at the same time around the world. Every 3-hour window is the same. If I was I've showed this on every instrument. It's the same. Now, obviously, volatility may vary from pair to pair, but what's important is the understanding. So we get our first red day. Do we have trap volume? Absolutely. And does this allow me to form a bias? Possibly. You'll notice that when we closed on the Monday, we were quite a ways above the breakout. Did I expect that the market would come back? Absolutely. When we close on the Tuesday, or the Monday evening, Tuesday morning, we consolidate underneath this volume. So possibly the market could pull back up maybe into there. Does it? No. Its original directional drive in Asia is down. They take out Monday's low. We have other time frame traders in the market. Breakout, pullback, and again the timing window, beginning of the year obsession. The reason I'm not putting the timings or anything else on here is I want people to look at the chart, because I get this all the time. Why don't you use, a trading view, and why don't you use this, and why don't you use that? A chart's a chart. I use MetaTrader. I'm sure there's lots of good reasons for TradingView, but for the demonstration purposes, it's irrelevant. Chart's a chart. So we continue that move. We've put a new low in place. They pull back into that original short trade, pull back, and continue the move down. And you'll notice again coming back down towards the previous Monday or possibly the previous week's low. Now again, I'm only walking through this to understand the concepts of the weekly templates, 3-day cycles, and coming back to Friday, you'll notice that Wednesday's high was the extreme. They consolidate inside before hitting the stops with a peak formation. I get this question all the time. What is a peak formation? That is a peak formation high, which means that on the Monday, if I'm looking at this chart and I see the potential of the market pulling up into that level for a sell, this is a classic do not counter trend the peak formation setup for a potentially reversal short trade. So they put a peak formation in place. If you counter trend the peak formation, similar to the previous Friday, peak formations down low, traders short down into the peak formation. They short into it on the Tuesday. They get caught down low, chasing the trend. If you had indicators on these charts, they would be all directionally biased in that direction. So again, we get our Monday, Tuesday, Wednesday. This is a payrolls week. And on a payrolls week, it is not uncommon to see day 1, day 2, day 3, Wednesday, and then the continuation of that move into the low. So day 1, day 2, first red day 1, day 2, day 3 is our Thursday, but you'll also notice they trade in both directions, whipping back and forth, chopping traders up. Again, the mid move, the midweek consolidation chop before continuing down. So when you see this setup, you have to be thinking 5 days down into non-farm payrolls. Creeping trend, lower highs all the way down. Lower highs each day, forming a lower high. Creeping trends, lower highs, and then we get to Friday, and not only do we get 3 days, 1, 2, 3, and then 1, 2, 3, we get a 1, 2, 3 into payrolls, a 33 setup on payrolls Friday. So again, 1 push, 2 pushes, 3 pushes into payrolls before the reversal, and non-farm payrolls forms our first this should be first green day after 5 days or 4 days of red. So first green day, same principles apply. First green day, the market reverses, and you'll notice this not only was a green day, but it closed on top of Thursday's high. So we've taken out the previous day's high as well as a reversal. So we get our day one on Monday inside consolidation, narrow range day. I'll just scrunch this back up because I want to understand the concept. We've taken out the lower highs. Level 1, day 2, day 3. And we'll bring this down in a second. But we go back all the way to the high of the previous week, and we form what's called a half Batman pattern, which some of you may be familiar with. If you turn and look at Batman sideways, that's the half Batman reversal stop hunt setup. So Monday, Tuesday, again, Monday, Tuesday, high and low possibly for the week, but in that process we've gone level 1, level 2, level 3 into a peak formation, stopping out traders that were short from Tuesday downwards, clearing out all these lower highs before reversing back. And again, just going to talk about timings. This is the end of the first hour in the US 12 candle window. So the equity session opens and takes out Monday's low. And then Wednesday we come back up with a creeping trend and reverse in again the US 12 candle window, taking out the low. So we have payrolls Friday, day 1, day 2, day 3 into the peak formation high, dropping down and pulling back, and we get a first red day on the half Batman day. Again, trapping volume all up high. So again, Friday's payrolls, when they shift the market up here, consolidate on Monday. And we'll just put first red day in here, consolidate on the Monday. We get our first red day on Tuesday. And not only do we get our first red day, but that first red day closes underneath trap volume. They pin up into it, again getting traders to chase the move long before dropping down, peak formation again into the close, and possibility that the low of last week is our target. Now we had the RBA announcement this morning. Obviously seems to have been reasonably uneventful in terms of the price action. But again, coming back to just understanding some simple concepts, first red day, so traders who were aware of this, okay, we see the consolidation, we see the market moving higher. We're not looking at numbers, but we've talked about the average stop on is 25 to 50 pips. This market opened up roughly around the 74.90 level. It went up as high as 75.33, so 25 to 50 pips. Put in a peak formation in the US 12 candle window, sold off, creeping trend up, clearing out the entire day. Okay, just looking quickly at the Canadian dollar, and again, I don't want to go too in depth into the daily charts, and people complain my videos are too long, but I'm just going to hammer home some simple concepts about these repeating cycles. Again, we had a Friday sell-off, non-farm payrolls. Monday was a narrow range day, but it gave us a green day. Now again, big move down like this. This is a textbook scalable trade setup for a Monday, Tuesday, low of the week trade. Excuse me. The market has traders wanting to short this market. They want to see the follow through. Their indicators and everything are taking them down. First green day. And this is a textbook setup for, again, geometry down low, trapped volume for the explosive move back up. Now, I'm going to show this chart with the numbers and levels in a second. We talked about the Canadian dollar at the beginning, towards the end of last month, and the beginning that people who were selling that down were selling at the low of the year. and we'll look at the difference that that has made. But I just want to talk about day 1, day 2, day 3. Now, these trades, again, are textbook, and they will show up over and over again. And this Canadian dollar is going to be a great trade because possibly we have a news catalyst happening tomorrow, unemployment on the Canadian dollar. So this may be setting up for a large move. When we look at the daily chart, we talked about this 3 pushes into the low, and I mentioned, as I just talked about in the a few seconds ago, traders who were shorting this were selling down at the low of the year. We head into the new month, and again, this is where, you know, these first red days and everything at the beginning of a month can provide traders with massive opportunities. So, not hindsight, it's understanding the process, looking for things. The low bear candle, beginning of the month, you know, 1 bar stops. If you're even trading end of day, this is the sort of scenario you want to see. You want to see consolidation at the low of the month. Traders want to sell this. All your indicators are saying to sell. But since then, we've had an explosive move. When we come back to this week, we can see again day 1, day 2, Monday, Tuesday form potentially the high and low extremes. This is a geometry down low. Payrolls takes everybody down low. They pull it back and give us our first green day on the Monday. They retest the low of the week. Day 1, day 2. Day 3 goes vertical, and day 4 taking out yesterday's high. On Thursday, we have unemployment, Canadian unemployment tomorrow. If we just come back and look at our 12 candle window, and now look at this, just bring our weekly separator up here again. It doesn't matter what instrument you're trading. Now, every week's going to be different because of where we're at in that monthly template in terms of the weeks. We could be in week 3. We could be up high. This is week 2, week 1 basically, because the week started on Thursday last week. They got traders going long, then they come down and hit the low. Narrow range day, first green day, they go back and hit the low. Now, timing wise, look at the timing. Now, this is the beginning of the 12 candle window. So again, I want to emphasize, time frame of the chart is irrelevant if you know what you're looking for. This gives me big picture, highs and lows. When I'm down here, I could be on a 1 minute chart looking for behavior to give me an entry super tight down low. Now, it doesn't matter what time frame you get in on, but the further away the market moves based on the closing of your time frame, the harder it will be, or the you know, your fill obviously will be worse. Now, if you understand time rotation, 1 hour down, 1 hour down. These 4 bars is 1 hour down. We get an engulfment and a bear pin, and then the first candle of London engulfs the entire lower structure. That is a shortened W on a smaller time frame. So we've hit yesterday's low, and then we've had an engulfment, and you'll notice that when the second hour, the hour of the London Open closes, now we have engulfed the entire first hour. So now we have a 1 hour chart engulfment and a bullpen hammer at the close of that hour at the quarter level, and we have a creeping trend down that went vertical at the open of the session. So these are all little things that you need to start to understand in terms of timing. There's a reason why the market stayed tight and then all of a sudden starts going down to the low of the week at the beginning of the session. If you're short, if we just bring up some basic indicators on here, some moving averages to show this to people, nothing else, just moving averages, people would be shorting this. And guess what? They've just shorted into the reversal, an explosive reversal. So the professionals are taking money in handfuls at this stage. They're loading contracts in, going to break even on the early ones, loading more in, so the risk is the same. Taking some off, loading more in, and then going into the U.S. session and holding on for even more. So this is a textbook low of the week setup. First green day, down low after a big move. And again, we looked at the daily chart in a strongward moving market. Beginning of the month, 1 day down, little bar, stop hunt to the low, which we just looked at, That's what we're looking at on our Canadian dollar. That's the explosive move. And then when we get into our next day, timing window again. So they, no matter what time, what session you're trading, over the course of the day, over the course of the session, they will put a high in place. It may be a low first. They put a high in place. Then they will put a low in place. If they keep going lower, that means they're not done. They put a low in place, they pull it back, and there's our higher high. And then what do? Into the open of the equity session, they pin down into traders who got it right. We call that the first mouse. And then the second mouse gets the cheese. Where do they go? Back through yesterday's high. They got traders who've been shorting this. Oh, it's going to reverse. It's going down. They're shorting down into the low. The market's going down to put a low in place. Put a low in place. Put a low in place. 3 pushes. Higher high. Timing is everything. Level. When this behavior shows up, I want to get filled before 50. That's what I'm thinking. When this market's closing, if I'm in on a smaller time frame or I can't tell because maybe the price action's a little volatile, by the end of this 15 minutes, I've had 15 minutes to watch the 1 minute and 5 minute to confirm my thesis. The 1 minute would already be giving me an entry signal. A 5 minute would close with almost the same price action formation. We'll look at that. What do we see? A little bullpen hammer. 1, 2, 3 up, a 1 bar pullback for the explosive move up. This is a scalable trade setup. This is the same thing you will see again over and over again. It doesn't matter what instrument. So when people say, can you review this on this pair? You need to review it so that you understand what you're looking for in live time. People want to see me do it live. I don't know what it's going to do until the market sets up. I'm not going to sit here for 4 hours. I'm looking for something to happen in that first hour. It could be a second hour trade. But when I see it, I'm going to get in and I'm going to put a 1 bar stop in, and then I'm going to put a target in, and I'm going to, take 25, 50, whatever. The market could go 400. And if I get 50 pips and it was an explosive scalable trade setup, perfect. If I should have gotten more, then I need to learn from that trade setup. High and low of the day. So these are the same things you will see over and over again. Day 1, day 2, day 3. We have unemployment tomorrow on the Canadian dollar. So they're going higher still. Right now we still have just green days. So we may see something happen today that confirms a bias in one direction for tomorrow's U.S. session announcement trade. But for now we're going higher. The daily chart is higher. We may see a creeper down tomorrow and for an explosive continuation on Friday. I'm not sure until they print that chart. But I'll be looking at that, because it could potentially offer a news catalyst trade setup. But, it doesn't matter what instrument you're trading, whether it's gold. I like gold because it offers a lot of opportunities. So we look at gold, and gold offered a massive squeeze trade on Tuesday. Again, day 1, inside of the payrolls peak formation. This is a classic accumulation reversal setup. We talked about the 3 push creepers down, the explosion, the consolidation on top of the Asian session, and then the pin hammer first bar trade setup on Tuesday for the massive move up. We see, again, just coming back to some simple concepts. If we go to the 5-minute chart on gold, people talk about the volatility. Every session I have one thesis. I want a high and low put in place. And I need to be looking at what's happened in the previous sessions. But the market, when the session opens, they come down and they put a low in place. If they're working the low and this gives me a trade setup going into a first bar trade, then I'm going to hit it. Especially if we have lower highs creeping into the numbers at 50. There's our W. Creeping trend down. We're out of the market in that hour. Creeping trend down into the session. They come down and work the low, pull it back and pin. This pin is a classic reversal setup. That's the middle structure on a smaller time frame for our W. We get a bullpen hammer coming off the numbers after they've come down to hit the stops. Great example of, do they need to come all the way down? No, but they're coming into the guy who's in the money. Creeping trend, high of the day still up here. Are there stops sitting up here? Is this a possible explosive trade setup? Absolutely. Once this trade is over, understand this. When they have a big move and we're into the end of the session and that move's already had a great explosive trade, in my mind, I'm already under the rationale that this is now going to go into consolidation. Pin to the high, they come down, before the session in the U.S. opens, and they reverse that with a stop hunt low. Now you have peak formation high, peak formation low. That's the classic setup for an explosive move. Consolidation in U.S. session, we head into the Asian market. So even just looking at this, they locked in the numbers at 25 and double zeros. This was a dead giveaway that it was going to be a narrow range session. Nothing was traded outside of that session, so you don't even bother. We go into Asia, consolidation, first bar trade, set up second hour for that explosive straightaway consolidation. This is a narrow range, explosive, scalable trade setup, day 2, level 2, trending day. So again, just looking at some simple things, they will put a high and low in place in every session. So they go up, pull back to the numbers. They go up, reverse the market. There's a high, but we're in a trending market. Traders are selling this, so they've sold the first high. The market's putting in a high in place, puts in a low in place. Again, engulfment, pin bar reversal with trend. Okay, with trend. After they've hit the stops. Look at this, consolidated volume, dead giveaway. They're going to hit the stops. That's a dead giveaway. Whenever you see volume consolidated, they go up high. This is not what I do not want to counter trend. That's not obviously there was a trade there. I don't want to do that. I'm looking for the easy money, the continuation. They go vertical into the open of the first hour. They go up and put a high in place. They come down and give us a low in the session. Pull it back inside. This was a news catalyst, ISM Flash Manufacturing, I believe. First bar up was the announcement. They go up and hit the high inside the peak formation before shifting away and clearing out the entire day. So, put a high in place, put a low in place. There's news coming. News comes, they hit the high, they reverse the market, drops down, consolidates, and pulls away. Just every time as the market's going higher, you have to be looking at this and saying to yourself, all this volume is getting caught up high. Okay, they go up first in the U.S. session. They go up first. This is not down. This is not down. This is inside of a bull candle. They go sideways and go up. Put a high in place, come down below that, and put a low in place. Work it down into the low, but there's news. News takes traders higher. They reverse it, drop it down, shift away. So, day 1, day 2, day 3, this is a classic Wyckoff possibly accumulation pattern, type 2, I believe. Dragging traders up inside of the peak formation. They've now dropped it down. We haven't taken out yesterday's low. If this market was to proceed lower, so it could go up first back into Asia. I don't know. Don't know until they get there. This could come down tonight, give us a red day, possibly pull back, and this market has the potential to come back down. And again, if we go to our 15-minute to see the levels, clear out a lot of the higher lows from last week's first green day reversal, which could take us, if it was to reverse, possibly take traders down somewhere in this level around 1770. Just a perspective, not a trade recommendation. And of course, it's that may not happen. It could peter out, reverse, and continue to move up. So we've had a trendline break and a retest of the high, which is again classic signal. So again, I'm not counter trending on the day. This was a great setup this morning in Asia. Great setup yesterday in Asia as well. But we have now possibly, if this was market to pull back and come down lower, we have our little gift. If we get our red day set up for trap volume up top, and if this market does come down because traders from last week, these higher lows have had a free lunch, and gold could easily spike down and still be in an uptrend for the month but we could still come down and clear out a lot of these higher level lows that are there. So again, keep it simple, traders. Step back, let the market set up. Focus on the timing window. Don't try to chase every swing in the market. Let the market set up and create some geometry that's going to give you asymmetrical risk reward and give you trade setups that when they move, there's very little stress, and they offer you the opportunity to scale those when you've got that right. There's no heat on your trades. A great example, again yesterday, that trade was 29 minutes, 70 pips in 29 minutes, straight vertical. This morning, same setup, first bar trade on the 5-minute chart. Both same setups, just going in different directions. Peak formation, half Batman, stop hunt. Into the close of the session, they go up early, put a high in place, pull it back, put a low in place into the peak formation. First 1 minute of the second hour engulfed, a 3-push structure off of 50 before dropping down. Not as explosive as yesterday, but again, they're counter trending, a lot of trap volume. Classic day 3, whipsawing in both directions, a Fed day. So we'll see what happens today. Keep it simple, traders. Have a great trading session. Again, thanks for a ton of great questions and feedback. My apologies for the delay. Enjoy.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.